Okay, here's a question for you. Is it even possible for a stock to be like this amazing AI rocket ship and also maybe a bit like a Bitcoin story that just flew way too close to the sun?
Yeah.
That contradiction. That's what we're digging into today. Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today we're doing a deep dive into IREN Limited, and this is all based on our research from October 10th, 2025.
Right. And maybe let's start with the big picture first, the market context. So the market's ticking up slightly green today, yeah. But the underlying economic story is, well, it's complicated. You've got these reports showing really robust national GDP numbers. Great. But then right alongside that, there's new data saying nearly half of U.S. states are actually in recessionary conditions.
Half the states. Wow.
Yeah. So there's this fragility. And for a stock like IREN, which is riding high in momentum and has a big valuation multiple, that kind of backdrop makes it super sensitive to, any shift in mood. It acts like a volatility amplifier.
Okay. So let's unpack IREN itself then. This pivot they did, it sounds pretty dramatic. Moving away from just Bitcoin mining to really leaning into AI cloud computing.
Oh, it's incredibly aggressive. And the market has absolutely loved the narrative, especially the focus on new NVIDIA gear.
Right, they're doubling their AI capacity, targeting something like $500 million in annualized revenue by early 2026.
Exactly. The growth story is, well, it's spectacular on paper. But you have to ask about the price tag. To fund all this, they did a massive $875 million convertible notes offering.
Wait, hang on. $875 million just for this pivot. That sounds like a huge gamble. Doesn't that load them up with potential debt and dilution risk if they don't actually make money from that AI capacity straight away?
It absolutely does. And that's the core conflict, right? You've got the share price up near $64. Yet when you look at fair value models, multiple ones are pointing to something more like $38 to $44.
$38 to $44 when it's trading at 64.
Yeah. And there's even one admittedly very bearish model suggesting it could be worth less than $2. But what's fascinating is that the big money, the institutions, seem willing to overlook that valuation for now. They're betting on the NVIDIA connection, the AI story, maybe hoping those early contracts get really sticky.
Which explains why Wall Street seems so split. You have, 75% of analysts still saying buy based on that growth?
Pure growth trajectory, yeah.
But now we're also seeing a strong sell rating starting to appear. It's like a financial tug-of-war playing out.
Exactly. And if you look at how traders are placing their bets in this war, the options market is surprisingly confident. Bullish even. The put-to-call ratio is down at 0.62.
Which means for people not glued to option screens.
Basically means traders are buying way more calls bets, so the stock will go up than puts bets and it will go down. So yeah, pretty aggressive optimism there.
Okay, but then you've got the other side. The bears haven't packed up and gone home.
Not at all. Short interest is significant. Over 13% of the available shares are being shorted. That's a lot of people betting pretty heavily that this stock is due for let's say, a reality check.
13%.
And the technical charts, they kind of echo that same tension. Look, the uptrend is there, it's powerful, it's established, you see strong volume behind it, momentum is accelerating.
I sense a but coming.
But a key momentum indicator, something we watch closely, is deep into what we call overbought territory. Think of it like a rubber band stretched really, really tight. It suggests the stock is overextended, vulnerable, it could snap back pretty sharply, pretty quickly.
So momentum's winning right now, but it feels fragile.
Momentum can vanish in an instant, yeah.
Right.
Right now it's overriding traditional value metrics, but that won't last forever.
So putting it all together,
yeah,
this powerful story, this terrifying valuation, where does that leave you, the listener?
Well, based on all this data, our synthesis leads us to a cautiously bullish outlook. For now, the story, the momentum, it's just too strong right now to actively bet against it. Cautiously bullish.
Okay, but the risks are crystal clear. You've got that extreme overvaluation we talked about. You've got the technical overbought warning flashing. And the whole market backdrop is still, a bit fragile. Strategically, keep an eye on the $65 level. That seems to be the immediate battleground.
And if it breaks lower, what kills the bullish idea?
If it breaks decisively below $60, that feels like the point where the positive narrative is probably cracked.
Right. So, IREN, it really feels like a pure momentum play, doesn't it? Driven entirely by this AI narrative. And the big question for you listening is probably this. Are those convertible notes, that huge debt offering, just a necessary bridge to get to this AI future? Or are they actually a ticking time bomb, dilution waiting to happen if the revenue doesn't roll in exactly as planned? Something to really think about. Okay, that's all for this deep dive. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next deep dive.